Jeff Zananiri. He is with Wealth Press, and he's spent over 2 decades on Wall Street learning how the best of the best made consistent money in the market. He mastered the art of trading at PN Capital, where he was part of a small group of traders who traded 5.1 million in seed capital into over 700 million.
Wow.
And went 10 years without a losing quarter. That's pretty impressive.
Absolutely.
Well,
So with that, I'm going to stop sharing here, and there you go.
I hope I pronounced your name correctly. I practiced a lot.
Perfect. There's something with you guys now.
Okay, great. We see your screen. We hear you well.
He's a pro. Look at that. Got that going.
Like that?
Yeah, there you go.
No way.
I like to still be on video so people don't think I'm like running around town while I'm doing these webinars. You know, I'm here. I'm locked and loaded. Okay.
Okay.
So, I'm going to talk to you guys today about a strategy that I have called monthly money flows. I've traded all types of systems. I've day traded, I've swing trade, I've managed longer term money. And one thing I've noticed is that there are patterns in the market based on time, okay? And so I developed a strategy for people out there that don't have a lot of time, but want to be more active than just sitting in stocks with no plan, okay? But before I get started, I want to introduce myself. My name is Jeff Zananiri. I'm founder of Joy of the Trade. I made $1 million in half an hour. I helped to grow a hedge fund from 5.1 million to 700 million. We did not have a losing quarter in 10 years, which is something that I'm super proud of, and I haven't really met anyone that has the same type of thing to talk about. And we owe it all to often ignored trading element. One of them is that people always ignore is that you need to pay attention to time. You need to pay attention to time, but I'm going to get to that in a second. So I'm going to review a few charts and setups that we actually executed. Then I'm going to tell you about my next trade and when you can still get in. So most traders go about trading and investing with no grasp of time. They always look at things like price and have no idea what to expect in terms of returns. So for instance, you'll see this a lot nowadays, specifically with a lot of people that are just getting into the market for the first time. They're like, okay, I love Tesla. I'm going to make 1,000% in Tesla. And it's like, they expect it to happen in 2 days. Well, maybe it comes close, but it doesn't quite happen. They don't have a strategy based on what a standard move for a time period is and what it should be. The savviest quants and Wall Street guys are always slicing up the market into time snapshots and intervals. So you need to have a strategy that correctly sets time parameters for a trade. That's a crucial aspect to a winning system. You have to have your risk reward, you have to have your target, you have to have your stop loss, all matching the amount of time you expect this to stay in a trade. Many like to pick on day traders, but it's day traders often have the most discipline in maintaining strict time controls and knowing what time intervals they want to look at on a chart basis. And they also often spot massive money flows first. So what first looks like a small ripple on a 1-year day chart could be a 2 standard deviation move on the 5-minute chart of a day trader. That's why it's important to keep that perspective no matter what trading you do. Most people don't even look at the correct chart to map their trades. They'll be focused on a daily chart for a year or longer to put in a trade to make a couple of percent. Take, for example, this QQQ chart. This is a year chart on the QQQ. It's gone a lot higher since I've had this in July, but people will be looking at this and trying to figure out where they're going to time into this trade to hold it for 3 hours. What they should be looking at, if they're going to hold it for a few days, is a month chart maybe. They should be looking at this month chart. And that will give you a much tighter range and a better expectation of what types of move happens from a day-to-day basis and from a monthly basis. So when you understand what a normal move is, then you can have an expected move. Then you can build, those are the cornerstones of your strategy in any particular time period. And that's going to improve your trading dramatically. So you're not going to just be time agnostic, as they say. You're going to not just focus on price. You're not going to just focus on RSI. You're not going to focus on oversold conditions or whatever it is you focus on. You're going to focus on, how long do I want to be in this trade? What's my opportunity cost for having my money tied up in this bad boy? What's going to be a home run in it? And what's my risk? What's a really bad result for this period of time that I'm going to be in it? So when you understand that, you start to plan and map your trades different. Your stop loss levels and target become much more accurate. You'll be able to have much better stop levels and reasonable targets. Your system will have more what, like old school Wall Street dudes like me call edge. That's what your edge is, right? So when you have a system that gives you a high probability of winning, and you know how much you're going to win, and you have the math solid and airtight, then you can get edge. You can get edge over the market, and you have to have that as a cornerstone of your strategy. Can I use this for my own trades? Of course I can and do. I do it to the point where I can identify my exact entry and exit point every month. Does it really work? Yes. Here's how I've used it. So back in March, the stock market was getting wiped out. Crisis was happening. Everybody remembers it. Feels like it a little bit today in the market, but it was end of days. We had huge outsized down moves. But I spotted that a monthly money flow was developing in Citrix systems. All you had to do was place a simple $3,000 trade on March 3rd. And you can see it here. You can see this big up bar. Let me just move this thing down a little bit. This big up bar comes in. And on the 30th, you could have cashed out and made a spectacular $4,110. That's because, and this is kind of a trick. This is another way you get edge. Smart money is made off the big institutions. So you kind of want to pick these guys off. And the beauty of it is that when you start to think like they think, and you understand how they evaluate when they're going to get into trades, you can game them. So the big institutions have to move billions of dollars. Typically, when they're entering a stock, they can't do it like you or I or a retail person and just put a trade on in half an hour, put a trade on a specific price and get filled. It's a little harder with options. You bump up against some size sometimes if you have a certain amount of money. But specifically in cash stocks, these dudes have size to go. They have billions to put on. And when they start putting on, it takes a little while. So they can't simply make one big trade. They have to buy stocks slowly. And that's called an accumulation period. And they often do this over the period of exactly 1 month. So on the first of the month, not the first day of the month, the first trading day of the month, I look for early signs of accumulation. And then I jump in. I'm actually looking at the first 2 trading days, but then I jump in and ride this easy money until the end of the month when I cash out. This is like, this is kind of like the lazy man's edge hack. Like if you want to trade like an institution, but you don't want to sit there and actually do it like an institution and have a job, this is the sort of stuff to do. For example, on the second trading day of April, I noticed that Marathon Oil was trading up 6.4% and double the average volume, which is another huge sign of accumulation starting. And you could see that Marathon Oil ended that month up 86% in 1 month, right? So I saw that it was one of the top performers in the beginning of the month, huge volume, and the institutions just gobbled it up. That meant that a monthly money flow was in the works. Just give me a second here. If you placed a simple $5,000 trade on April 3rd after noticing this, less than 30 days later, you could have cashed out with a spectacular $8,350. Easy peasy. You see the size just coming in, this massive size. And that's accumulation. Do that once a month for the rest of the year, and it could be a total of $40,200 in profits from simply riding the monthly money flows. Are you starting to see the power that monthly money flows can give you? Can it be challenging to get started? Yes, it can be. If you don't know what you're doing and you're going to be experiencing trial by error, you're going to be sitting there on your own trying to figure this out. So here's the deal. I already, and today just so happens to be that third trading day of the month of September. I just put a trade out today. I find this exact trade opportunity every month. If you want in on these exact trades, if you want to see exactly which trades I make, and you want to see and spend time with your family rather than hunting down all the required research, let me be the foot soldier on that one. I love this stuff. I'm always looking at the markets. I have 3 kids. I'm a busy person. I understand what it's like to have a full life, and it's important to have a full life if I can get sidetracked. So this is a perfect trading strategy for someone that wants upside return of the flows that are happening and momentum in the market, wants a more sophisticated strategy without this huge educational hurdle, without this huge time commitment. So I do that. Let me do that for you. Let me put you on the right path. Introducing monthly money flows. So you're going to get, with this monthly money flows program that I have, you're going to get 12 monthly money flows. There's 12 months. You're going to get 1 trade before the 3rd trading day each month. Take it off on the last trading day of the month. That could earn you profits like $4,110, $8,350 or more. Each monthly money flow alert comes packed with my own in-depth research. I don't just give you the levels. I give you the levels, but I give you a bigger breakdown on top of that. Plus, I give you detailed instructions for placing and exiting these trades for big and consistent profits. But we don't stop there. Bonus number 1, you're going to get a monthly money flows video. Each month I'll review the selected monthly money flow trade that I was in, and I'm going to talk about the one that we've just entered. Monthly money flow bonus number 2. I'll explain how to profit from global money flows through ETFs. I have deep experience, hedge fund experience, one of the size players trading ETFs, trading international ETFs, index ETFs, and you can spot these macro moves, these institutional moves in the ETFs very clearly. And when you learn how to play that game, it's like a whole revelation for you. I will offer you a hotline. This is your direct line to me and my team, where you can call us with any questions. I like to keep the dialogue open. As you can see, I'm a very plain-spoken guy. I enjoy teaching about trading. I enjoy the markets, and I like the back and forth. I like the interaction. Everything I've mentioned is worth thousands of dollars, including my scanning process, which I use Bloomberg for, which costs me 2 G's a month. I could value this at $1,497 per year, but I really want everyone to have access to these trades and the coaching necessary to make trading second nature, so it won't eat up all your time. I don't know about you guys, but I have a lot of friends that are family people, right? They have children, they have like these full lives, and they have these professions, and they got sucked into the market because the market's awesome and it's a cash flow machine, as we all know, and it's super easy to make money. So they got sucked in, and then they're just staring at it, and then they have 1 good trade, and then they have 5 bad trades, and then it's like, before you know it, they're just sitting at their desks all day. And these dudes are like successful people making deep 6 figures, friends of mine, neighbors of mine, and then they're texting me all day, and they're like, how do I put in this limit? I'm like, no, this isn't how it works. You want to sign up? I'll give you edge. I have a program. We're not just going to be in the wind, in the breeze. You're not going to be sitting there all day. It's not going to eat up all your time. Just follow the system. So my publisher asked me to do something kind of silly with this monthly money flows, and I'm still reconciling it. It's still something I'm processing. How much do you think one of these trades is worth? And then I'm going to tell you about the first 2 months of monthly money flows and what those trades did. Post your guess in the chat right now. Think hard. How much would you benefit from a full year of these trades? You'll get a minimum of 12 trades over the next years for just, is it $497 a month? Nope. $197 a month. It is not. $97 a month. That would be reasonable, I guess. $20 was not $20. Are you ready to be shocked? And I want you to picture me when my publisher told me this, because I also have a full service other strategy that's much more demanding and much more time necessary, and there's a lot to it. And so when he asked me to do this and he told me the price that we would do it at, I almost passed out. I almost fainted. $5 a month. So you got to understand something. Like, this is an institutional edge, like hedge fund trading strategy that works. $5 a month. Like, I have 3 kids. I've got a 7-year-old that buys like outfits for video game characters for like $10 a month. And we're selling this strategy for $5 a month. That's for me, it's just preposterous. But we've expanded the tent like incredibly. So I look at it like, okay, this thing is $5 a month, and I'm putting all this research in, and I'm putting this time in, and I'm giving you edge, right? But what I'm finding is that people are getting into it, and there's people that are graduating, they're saying, I want more. But at the minimum, they're learning and understanding that you need to have a system. You can't just be there in the breeze. And you need a system that takes advantage of time. It takes advantage of institutions. It games how the real game is played. Because otherwise, you're just sitting there and you're buying and selling stocks because you like them or because it looks a certain way on a chart. And you don't really have a consistent methodology as to why you enter a trade, when you're going to exit a trade, what should stop you out of the trade, and what your reasonable, realistic target should be. And that's kind of one of the biggest things that I have found that separates not only winners from losers, but pros from amateurs, is that amateurs can go into the market and they can make money because they timed in good and they have a good read on the market for a short period of time. But invariably, because they don't have a system and because they don't have a methodology and they don't understand the element of time, what ends up happening is they go back to the casino and they give it all away. And one telltale sign that that's going to happen when I'm talking to people, and I'm kind of a gregarious guy. I like to talk to a lot of people. I play a lot of golf on the golf course, and I talk to doctors, and I talk to this guy, and I talk to that guy. And invariably, I always ask the same question when people brag about their awesome trades, because that's what people do, especially like, in the testosterone country club scenes. And I always ask the same question. I say, do you know why that trade worked? And they always stare at me when I say that. I said, do you understand why that trade worked? And very rarely do I get a satisfactory response to that, which is scary. Because if you don't understand why and how you made money and why you made how much money you made in that period of time, the likelihood of that being repeated by you is extremely small. But if you become a mechanic of trades, like I profess to be, that I know that I am, and you come up with edge and you come up with strategies that exhibit edge, you understand exactly why your strategy has performed the way it has. You understand the type of market regimes that it's going to perform the best in, and you completely exponentially improve your odds of repeating the same performance over and over and over. So this one strategy that I'm offering today, this $5 a month strategy that I'm still having a heart attack over, it's super low maintenance, right? It's super low maintenance. It's super simple. There's not a lot of moving parts to it. But because it's consistent, because it's based on hard math that works, that's right, that's good. And because I've identified an edge in how institutions accumulate shares, works pretty consistently. So July was the first month that we offered the $5 foot long, okay? July. The first stock that we did was DocuSign in July. And so DocuSign, we made, the stock was up in the first couple of trading days, double-digit percentages on triple the volume. Fine. And the market's already been ripping out of this COVID recovery. Put the trade out. By the end of the month, DocuSign's up another double-digit percentage on the stock. I also give an options play, which is like again, super value, because I'm identifying a liquid option that's got a good strike price where the implied volatility isn't egregious, and anticipating what type of move is going to happen in the month, what the standard move for a month should look like, and all these things. And there's so many people that don't understand the basics of any of that, okay? And so the option for DocuSign for July was up 40%. 40%. So the stock was up about a little over 10% from where we bought it to where we exited on the last day of July. And the option was up 40%. Fine. 40%. That's 1 month. That's 1 month. Month two, last month, we just exited this trade. Completely different type of company. The Mosaic Company, phosphates fertilizer company that had 5 times the volume, that was the second best performing stock in the S&P 500 for the first 2 days of August. And it ended up ending the month of August, the second best performing stock of the month of August, or maybe the third. And it ended up 40% up by the end of the month. And the option we bought on the third trading day of the month and exited on the last day of the month was up 70%. So you start in July and you have $1,000. And then on the last day of August, on August 31st, you're sitting with $2,380, and you've been in front of your computer for probably a total in those 2 months to do these trades, an hour, probably like 15 minutes on each day, twice a month, half an hour a month. That's what it is. But I talk about these things the way I'm talking right now through this presentation in the video, in the bonus videos. I talk about them in looking back, and I explain not just why the institutions accumulated that stock in the month, but why the trade worked. Why the trade worked that month. And I identify where it got here, because it's not always like a linear line, right? So DocuSign in the middle of July, we had a little bit of volatility. We never got below our entry price or even close to it. But you know, the traders out there are nervous Nellies, and you take a 5% drawdown and people start freaking out. But the market was doing that. And I understood why that was happening. And because I understood exactly the type of move that should happen based on this type of stock, the volatility that the stock has, the implied vol, the beta that it has, the sector that it's in, the index that it's in. I understood that I didn't have to change my stop, because I'm putting this out into the universe, but it's not just it's not a black box, it's a gray box. So for those of you guys that don't understand what a black box or a gray box is, when you're talking to a hedge fund person, a black box is a strategy that an algo executes where you write a code, you write parameters, do this trade, and you never mess with it. That's black box. A gray box is a strategy that also has math and that has defined parameters, but has a portfolio manager or a trader that sits on top of it that tweaks it. So these types of strategies are much more gray box, because I tweak them necessarily. And from factual experience trading at the hedge fund that I traded at for 10 years, we crushed the black box, because we knew when the system was changing, when the regime was changing, when things changed, when the atmosphere changed. And a computer, strictly algorithmically, has no way of really picking up tone or market texture, as people call it. They call it texture, because it's not just a flat picture, it's 3-dimensional. And so by having this gray box component to it, I get really crazily angry about this $5 a month value, because I know that my gray box value is what my other services are valued at. and what my time has always been valued at, and the type of trades that I do and that I know, and the strategies that I do, what they're worth on the street to investors. But I love teaching. I know that people are getting into this game and they don't know what the F they're doing getting into this game. And I figure if we can expand the tent, and if I can at least give a bit of a toolkit for people that don't know what they're doing to at least learn how to approach the markets, because that's the first thing you have to learn how to do. You have to learn how to approach the markets. You don't just jump in there with both feet. You have to have a toolbox to learn what you're looking at and to evaluate it properly. So for me, it's been tremendously, the shock aspect of it is some of my favorite people that I've met have been these guys that have come in that have been like, my God, I was just in the breeze. I was just in the wind. I was doing whatever. I was emotional and I was just doing whatever. And now I'm, I joined your system and I crushed it in the first 2 months. Do you have more that I can learn? Yes, I do. Of course I do. But the fact that they've had this kind of like eureka moment where they realize that there's a game being played here and you got to learn the fundamentals or you will get run over. You will get run over in this thing. So for me, that's been incredibly fulfilling. And, that's the name of the game. So with that, I would say that I'll take some questions we can talk about. So, Jeff, do you see an edge? Do you see an edge in following insider trading reports? That's a good question. I do, but I'm more interested in institutional accumulation and dumping of stock. Insider trading and not illegal insider trading, to be clear for everybody that's watching out that. What Ken's talking about is the C-suite executives selling stock. A lot of times guys get divorced and they have to pay out the missus, or they have to buy their fourth mansion in Palm Beach because they don't want to live in Midtown Manhattan anymore. And so sometimes you can draw the wrong assumptions based on that stuff. So that's what I would say to that. Is this just for American stocks or do you do the UK? That's Mike. So I have an international trading background. I have another service called the Money Links. Yeah, here we go. That's beautiful. Thank you for bringing that up. I didn't know how to do that. So I trade internationally with the Money Links. With this service, this is just US, and I'm focusing on big US indices. I'm focusing on S&P 500, NASDAQ, Russell 2000. Does this work for the distribution side of the smart money, and do you present this side too? That's an excellent question. So for the $5 version, for this easy, low commitment on time strategy is what I like to call it. We're long only. So I'm going long. I'm buying stocks. I'm recommending buying calls. It's plain vanilla. It's super easy. My bet's on an accumulation of a stock within a month based on those criteria. I have another service that I'm in the process, that I'm in the lab, I'll tease you guys today, called Monthly Money Flow Elite, which is a much more complete service with more than just one trade. There's actually 9 trades. And a third of those trades are bearish positions. They're short. So there's distribution positions too. How much money do you need to have the account to use your service for options? Well, that's the beauty of this entry-level product. That's the beauty of this entry-level thing. So you don't need to have huge size. What you need to know is that this is money that is speculative, like speculation money. This is trading money, right? This is a trading account. And so you spend $5, you could have gotten like, I don't know, 10 haircuts instead, but you spend $5 on this service, and then you just buy a few options based on your comfort level for your options trading account. So you don't need a lot, and it's one trade. It's one trade for this product a month. Can you share last month's pick? Yep, I went over that, but it's MOS. MOS. It was ticker symbol MOS. And so it was an awesome trade. It was an awesome trade. It's, I don't know. Does anyone else have any questions out here? Jeff, if price falls apart, I see something. Jeff, if price falls apart. Oh, there's a chat. Sorry, guys. I wasn't hip to the chat. Now I'm on it. If the price falls apart through their month, will you communicate what we should dump? Oh, of course. I have a stop loss level that I put in there, which is based on the math on, you know, I like a positive skew. So when I'm talking about a positive skew means that you enter a trade where the win percentage, it's not about win or loss percentage. It's about making more when you win and losing less when you lose. So every trade that I enter has to have at least a 2.5 to 1 positive skew. So upside I see in it's got to be 2.5 times what I'm willing to lose. It varies a little bit based on the volatility. And that, again, that is the gray box value in understanding if I'm doing a short in Tesla, I can't give it a 4% stop loss because you're going to have a 4% variance intraday, right? So I can't enter the trade trying to make 8% because I can't lose 4%. I'll give that one 12%, but I'm looking to make 30% in a month because guess what? That stock moves 50% a month. So understanding time, understanding expected move sizes is actually like the magic secret sauce to all trading. So for those of you, I'm going to go off on a tangent here for a second. For those of you guys that like, you know, look at earnings and you're like, holy shit, that bank had 3 losing days trading in the entire year. Well, the cynic in you would say, well, they're just cheating their customers. I was a customer. They do a little bit of front running. They do this, they do that. It's fine. The way they make money, though, is understanding and having all these different books that have edge in all these different time periods, High frequency trading firms like Virtue and these guys that never lose money. They never lose money on any trading days. They splice up, and I've sat with some of these quants. They slice up their time intervals in the 2nd to 2-second range. And in a second range, they look and say, I can make 0.2 cents a share and I'll lose 0.05 cents a share. And if I can do that X amount of times a day, there's my business, baby. And so that's how professional traders always go about this. Always. It's all about price. It's all about return. And if you start looking at options, and and part of the fun of this monthly money return, this monthly money flow, is that what people don't realize is there's a reason that options are priced with monthly expirations, because every month tells its own story. So the thing is this: money managers, traders, portfolio managers, not just in setting up your trades, but in the way you evaluate your performance and the way you're judged and the way like dudes like me would get bonuses, was based on time periods, right? And so you have this monthly, each year has a story to it. Each year has a story to it, right? So people are looking at this year now, and the year's changed a lot. It's been an extraordinary year. It's been an uncharted territory of a year. But we're looking at a NASDAQ that's getting smoked today, but it's up 30% on the year. It's the best large index in developed markets on the planet, bar none. But we're now in this regime where you have a market up 30% in the year starting November, right? And so we've seen heading into today, and if you go back and I have a website called Joy of the Trade. If you go back and I do these videos, and I'm on all these panels all the time, and people were asking me last week, they were saying, Jeff, do you see any kind of like warning signs that the market's getting extended, et cetera, et cetera? And I said, one thing that's interesting is people don't understand the VIX. A lot of people don't know what the heck the VIX is. They don't really understand what the VIX is. What I saw last week, and it's kind of come into fruition this week, was I saw a VIX that was going up, while stocks were going up. And so people were saying, how is the VIX going up with stocks going up? I thought the VIX was a bearish indicator. It's mostly correlates with bearish regimes, But there are special regimes, i.e. when the NASDAQ is up 30% at the end of August, there are specific unique types of years where the VIX goes up while bull days go up. Why is that? Because what the VIX is really measuring is what your expected move is going to be, range of price looking forward for the next 12 months. So if you're at a 28 VIX, you're expecting that you have a 61.8 or something to that effect percent likelihood. So an edge percent likelihood that you're going to have a 28% move 12 months from now. It didn't say up or down. It says there's going to be a move of 28% in the asset price, right? So understanding the VIX, understanding where an expected range is, understanding what type of regime we're in, all impacts how I design the trades. All of it impacts what I think a proper target is. A lot of times I'll put on a trade and people will say, oh, another thing, I'm going off on these tangents, but I think these things are important. So I'll have like new customers or, new people to trading, and we'll be in like an 8% winner. Now the trade's designed to deliver, and I'm talking in an option. The trade's designed to deliver like a 50% to 100% plus return within the month. And so we'll be up like 10% or something. And I'll get these nervous Nelly emails, like in the middle of the night, I'll be watching, the Avengers with my kid. And then I'll just get this email and it'll be like, dude, am I going to get an update? I went to take the profits. And I'm like, dude, I didn't enter the trade for 10%. I'm giving it 15% downside, 20% downside. This trade's got to work. We got to let this trade work. And so all of that comes from not knowing what to expect, not going into a trade with a plan. I handle all that for you. What does the product cost to join? It costs $5. It costs $5 American dollars. Yeah. What else do we have? Did you short positions in COVID-19 full? Yeah, I short positions all the time. For this product, this is a long only product and it only started in July. But I'm in shorts today. Are these options trades? I give you both stocks and options. Alina Maxwell says, I have an amazing deal. Thank you. Yes, thank you. I think so too. And I hope you enjoy it. What else we got? Yes, but that is 6.75 Canadian, LOL. I've subscribed and it sounds interesting. Thank you for subscribing, Sean. Welcome to my neighbors in the north. We have a lot of you guys down here in Florida usually. I hope to see you again soon. Do I use spreads? I don't. I'm focused. So a lot of people, and I like spreads. But a lot of people are trying to pick off price discrepancies in different strike priced options or different calendar spreads they like to do. For me, that's always been a bit of a distraction. I'm really focused on the underlying stock, what I expect that move to do. And if I'm getting that part right, I'm making money. So I would hate to get that part right and have the spread wrong because you get some skewed imbalance in a specific area and you get like a gamma squeeze or something. I hated that. I don't like that. So very plain vanilla. I'm focused on getting it right, getting the moves right, managing the math, managing the stops, managing the target. I just joined. When do I get the first trade? You're going to get the first trade today. Today. It's coming to you. What else do we have here? When do I give the alert? I give the alert before the trading day of the third trading day of the month. So my members got their trades this morning. I would tell you the trade, but you gotta sign up. Have you had losing pick of the month? If yes, what happened? This product's only been 2 months old. So first 2 months were winners, big winners. If we have a losing trade, we have a losing trade. That's part of life. I have a stop, protects you. So, you're always going to expect a few small losses in a major operation. I had a guy that was a professor in college that was an extraordinary man. He had like 10 different lives. He He was a political science professor. He was an economist. He was a CEO of a large airline company in the 80s and 90s. He was an entrepreneur. He headed the Republican Party of Florida. And him and I became friends. And I used to get stressed out. And I used to talk to him in the beginning of my career. I was friends with him in college, but then I got stressed out sometimes at the beginning of my career because, you know, the game had changed for me. I had started getting into trading. I was on Wall Street. The stakes were raised. Performance mattered. Everything mattered. And so I used to still consult with him. And he'd say to me, you know, this guy's like old school cigar chomping Chicago dude. He'd be like, Jeffrey, you got to expect a few small losses in a major operation. Those words stuck. Like, you know, you see a guy like that that's had success over and over and over in like pretty much everything he's tried to do. And you say to yourself, what's this commonality to it all? You know, besides being interested in stuff, which is of course important. The commonality is that if you can't take small losses, you shouldn't be doing it. Like you should be like hiding or something. I don't know what you should be doing. But if you can't execute your plan, understand that sometimes the plan's going to go long or wrong, and see that you're having much more success than you're having losses, you're never going to make it in trading. Because I give these trades and all these great experts they have on this panel, we give you our recommendations and we give you our market insights and we give you edge. But invariably, people are going to find ways to not do it correctly. And on that point, on that note, it's not because they're bad people, but it's because there's that factor of resiliency and understanding that you keep completing the plot and the plan that they lack. It's that same problem when you're sitting in a small winner and you don't understand that the real strategy is for it to be a big winner. You're skewing your own returns when you get out of a big winner too early. You're skewing your own returns because that's what makes over the long period of time a trading strategy a trading strategy. That's what gives you that edge, because over the long run, you'll have 6 months, you'll have 2 losing months. Your average winner in the 4 months that you won will be like what I just described to you, 40%, 70%. So we'll say a blended average of 55%. And then your loser is going to be 15%. Guess what? Money in the bank. So that's edge. That's a strategy. What else do we have here?
Hey, Jeff, you know, let me feed you a couple of these.
Yes.
Just along those lines, a question
Raleigh.
came in here, which was, hey, if a price falls apart during the month, I mean, it just really falls apart, do you communicate that you should dump, or is this a buy and hold through the month regardless?
No, I have a stop level, Raleigh. I have a stop level that you should do how you do stops, you know,
Sure.
like you should put the stop in when you enter the trade, you know, the day after you enter the trade. I give you a good stop, so you probably won't get stopped out that day. But let's say something changes. The regime changes. That's the gray box aspect of it. Let's say there's a huge news story, something crazy happens, and everything's changed. Am I going to sit there and just let everything fall apart? Probably not. Probably not. But that being said, I'm fully comfortable with like getting stopped out at the level I'm getting stopped out at. Because I also want, this is the thing, these dudes that are buying this stock in the first 2 trading days of the month are going to be panicking to own that stock at the end of the month. So the stock we had last month, MOS, I really should have brought a chart of that. I'm sorry, but it closed the month near its highs. It was closing the month near its highs. So it was within a few percent of its highs after a 40% move by the end of the month, and massive volume at the end of the month. So these guys don't just go away. They just panic more and more as they get to the end of the month to own these stocks. And it's even more obvious and extraordinary in crucial months, like quarter-ending months, okay? Year-ending months, year-beginning months. The institutional fervor to be in certain stuff, because these guys get graded on a curve, most of these guys. Long-only portfolio managers, this is getting edge out of these guys, right? Those guys are graded on how they do against each other. They're judged on if they had Zoom or not. They're judged on if they were long Tesla or not. So they panic. They create these moves because they have to be in these stocks, and they have to be in them with a certain period of within a certain period of time.
Wow, that makes so much sense. And there's, several people are going to be joining your service today, and they recognize we're not quite at the beginning of the month. Are the picks that you selected for September still valid in your opinion for people that sign up today?
Yeah, the trade's going to work awesome. I mean, I think it's going to work awesome, but it's not gone away from us. This market's getting pounded today and it's a long trade. So it's well under where I would get into the trade. What I do to judge my own return, to be fair about it, is I take a VWAP average of the day that I gave the recommendation. So today, the market's going to close. I'm going to go on my Bloomberg. I'm going to get my VWAP for the option. I'm going to get my VWAP for the stock. And I'm going to put it on a trade tracker sheet for everybody, because some people get in and some people get in the morning. Some people get in the afternoon. Some people don't, got the email at 12:30, whatever. I personally, the way I trade, the way I recommend trading is I always use extended periods of time. I use algos because I know how to. So I use TWAPs and VWAPs because I don't want like one specific price because I'm going for a bigger move. I want a range. And, the thing is this. I'm going off on a tangent again, but it's another teachable moment. Like, we're market takers when we do this stuff. We're not market makers. A lot of people get too cute and they beat themselves up over getting in 50 basis points too early or 50 basis points too late. And they're losing sight of the fact that they're going to miss trades by doing that. We used to always say, get into your position. You want your position, get your position. Be a taker. Be a market taker. So I like to trade in slices if I have a position of, excuse me. If I got 1,000 shares to do, I'll do 250, 250, 250. I joined. What email should the alert come from? Wealth Press. So also check spam folder because sometimes it goes there.
Several questions have come in, and I think you addressed this, but I want to raise the question again to make sure that everybody gets that. And that's about, hey, does your service support going short?
So for monthly money flows, the $5 service, I do not go short. I don't go short. There's one trader and it's long every month. I'm in the lab working on a more expensive service, but a much more robust total strategy for people that are, really want to get into it. And there's shorts in that. There's bear positions in that. Mm-hmm. And that's what makes it robust. That's what makes it all weather. But I digress. That's next level.
So let me ask you, this is something that I've been asking, all the presenters during this symposium, Trading the Moment, and that is this. I mean, the past 6 months have been wild. We call it the COVID market. Are there things that have occurred over the last 6 months that give you pause or concern, or any particular opportunities that motivate you? And how do you feel going into the election cycle, looking forward just a little bit there? Any thoughts on that, Jeff? Because it's just been such a crazy year.
I have so many thoughts on all of it, Raleigh, but I'm going to start with this. So when I talked about time and I talked about being in an extraordinary market where we're up 30% on the NASDAQ and we're chasing everything. So why is that happening? So people are, it goes back to the question I ask my dentist and doctor friends on the golf course that are making money and don't know why. I say to them, do you know why your trade's working? They don't know why. So why is all this money flowing into mega cap tech stocks right now? It's easy. It's the only size game in town. You want to get a couple of $1 billion into a position that's going to have a return. Are you going to buy a bond in Germany that's yielding negative rates? Or are you going to buy a US Treasury, 10 years locked up, giving you 65 basis points? The answer is hell no, you're not. You're going to buy a stock. Stock might give you a 1% dividend. It might not. Stock's going to have crazy growth. Stock's going to be anti-fragile. The stocks that have been winning, the stocks that have been absorbing all this extra liquidity that the Fed's pumping out into the world, they're not just the companies that people are like, oh, I like to use this because I have to stay at home. These were companies that were thriving before COVID happened. And I got news for you. We were already starting to feel some recessionary things before COVID. And these companies were thriving. So COVID just expedited that process. And so you have this huge suction of capital from all over the world, from all these different indexes in the world. Because I got more news for you. If you're sitting in Spain right now and you're only invested in Spanish stocks, you're not so thrilled about your 2020 returns. It's not the same thing that's happening here, where people are just like, over the moon with their retirement account. So do I have concern? Yes, I have concern, because all that liquidity creates dislocations in the market. It creates bubbles. The problem with bubbles for people is that bubbles are the hardest things to trade, even for professional traders, because the amateur inclination is to just go short a bubble as soon as you've seen it. I read once George Soros said, what I do first when I identify a bubble is I always go long, a little, small size. I always buy in perceived to be a bubble for two reasons. Number one, bubbles always go on way longer than you expect them to. And I like to make money, so I want to be with that money train. Number two, when you're in a position with money, you really become an expert on price fluctuations, and I watch it much closer. So when I see that the real distribution is starting to happen, and this is kind of something that is, of course, near and dear to my heart and the basis of all of my trading, when I see that this distribution is happening and that people are dumping, like really dumping and getting out of these positions, I'm taking minimal losses, and I have the capacity to flip with size and go short the bubble. So I thought that was super, super insightful. I mean, he's an interesting guy. He's not someone that I agree with, politically. I don't want to get into that, but that gets me to the next point. Do I have a scenario for politics? September and October and early in November is typically extremely rocky, volatile month. I've been calling for September to be a pain in the ass since half of August. And today we're getting a real distribution day in the NASDAQ. NASDAQ down almost 4% on cash equities. And we're seeing dumping of commodities. Gold hasn't been acting well. The dollar is starting to get strong, and the weak dollar has been the tailwind for a lot of the market. And so I think it's going to be a bumpy month, but I'm going to say this. I'm going to say that the election is going to resolve itself in a lot less of a catastrophic fashion than people think it's going to. I think the election is going to surprise people, and I think it's going to offer an opportunity to have another leg into the end of the year into the category of stocks that I mentioned that was siphoning liquidity from the rest of the planet. Does that answer your question?
Yeah, it sure does. That's some fantastic insight right there, because a lot of people are wondering how much of the election is already baked into the pricing that we're seeing in the market. And the consensus has been too early to tell.
Well, I mean, it's a 50-50 ball, right? It's a 50-50 ball right now. I mean, polls come out and they say Biden's up 5%. But then, I'm a little bit of a politics junkie. And I went back and I looked at Trump versus Clinton 2016. And I was looking at Real Clear Politic. I don't know if you guys look at that website, but they have some cool back polling. And they showed that Michigan, which is obviously an important swing state that carries a lot of electoral votes. Michigan, Clinton was favored by 9 points on election day, 2016. 9 points on election day, 2016, according to the polls, average polls of Real Clear Politic. And Trump won Michigan. He won Michigan. Am I saying Trump's going to win this election? I don't know, but he's got a 50-50 shot at this point.
All right. Terrific. A couple other questions have just come in on your special offer. The $5 offer, that's monthly, or it's $60 a year. Is that a good way of looking at that?
You can get it for even cheaper if you buy the whole year. I think it's like $30 or something like that.
All right. So so if you go for the whole year, there you go. Terrific. Well, listen, Jeff, thank you so much for coming in today and presenting. Delightful to have you. Nice to meet you. Obviously,
likewise.
You have sage wisdom, terrific background. You've worked with amounts of money that many of us can only dream about.
I've been blessed. No, honestly, I look at it like I didn't have to work out that way, but I've been really, really fortunate. And so for me, this entire trader education path has been extremely fulfilling because I'm trying to share some blessings myself.
Well, I tell you what, we do appreciate that, and we're all going to benefit from the wisdom that you've shared with us. And folks, there you go. Wealth Press, monthly money flows. It's $5 a month or potentially cheaper than that per year. You'll have access to 12 monthly money flow review videos, how to profit from the global money flows through ETFs information, 100% money back satisfaction guarantee. I just don't see how you can go wrong with this. You go to westmarktrading.com/flow to take advantage of this. And we encourage you to check out Jeff further, get to know him better, his thoughts, his background, and other offers and services that he provides. Jeff, thank you once again. Have a terrific day, my friend.